So hello, pleasant day everyone. I'm Tricia Cedeño. I will be the second reporter of Group 5. So my first topic is all about prizes and winnings. So this section explains how prizes and winnings are taxed under regular income tax in the Philippines. So, the exemptions include prizes received without efforts like random draws. So, yung tax is nakadepende. Tax rules depend on the amount and source. So, prices is 10,000 and below regular tax. And then the prices over 10,000 is a final tax of 20%. So for example is kapag nanalo ka ng loto 8,000 pag nanalo ka ng 8,000 pesos is walang tax na mababawas dun sa napanalunan mo. Pero if ever na nanalo ako ng 500,000 pesos is mababawasan siya ng 20%, which is ang mababawas sa 500,000 ko is 100,000 pesos. Kasi nga 20% yung 20% yung mababawas na tax sa napanalunan ko. So next one is the partners distribute share from the net income of the general professional partnership. So meaning ang general professional partners like law or accounting firms is hindi sila binubuwisan. So, ibig sabihin ang mga partners ang magbabayad ng buwis sa kanilang mga shares or bahagi ng kita. So, for example, ako and si Karil ay partner sa isang architecture. Since hindi naman binubuwisan ang law or accounting firm is magbabayad, ibig sabihin ang mga partners ang magbabayad ng buwis sa kanilang share or hatian ng kita. So, for example, ang usapan namin is 70% sa akin and 30% sa kanya. So, sa 1 year is kikita ang architecture namin ng 1 million pesos. So, mapupunta sa akin yung 700,000 pesos and mapupunta sa kanya yung 300,000 pesos since it is a general professional partnership. So, individual yung babayaran namin na buwis. So as you can see from my PowerPoint or PPT, my topic is all about gross income. So under the tax code, gross income subject to regular income tax includes all income from any sources or source unless it's already taxed under final tax, capital gains tax, or special tax rules or exempted by law, treaty, or contract. So other taxable sources include distributions from taxable estates or trusts. So the next one is the share from the net income of exempt joint ventures and co-ownerships. So the same tax treatment on recognition of share in the net income of general professional partnerships apply to the share from the net income of exempt joint ventures and co-ownerships. So for example, is the farming income. Farming operations can be classified as two. So which is the raise and sell operation and the purchase and sell operation. So number one is the raise and sell operation. The process on the sales of livestock or farm products is included in gross income subject to regular income tax. Animal raising expense are presented as items of deductions against the gross income. So ito yung mga farmers na nag-aalaga ng mga hayop, which is yung mga binibenta, mga manok, pigs, mga kambing, yung binibenta nila, and then yung alam naman natin na paano mag-raise animal raising expenses. So next one is the purchase and sell operation. The gross profit from the sale or sale less cost of purchase is included in gross income. So ito na yung mga after na may mga buyers na tayo, yung mga magbabay na ng mga livestock natin na alaga. So, tax treatment of income from exempt joint ventures and co-ownerships and farming. So, these explanations covers the tax treated of income from exempt joint ventures or co-ownerships and farming operations, along with the rules concerning recoveries or of past deductions, income from exempt joint ventures and co-ownerships. The share of net income from exempt joint ventures and co-ownerships receive the same tax treatment as a general professional partnerships share of the net income. This means that income is passed through the individual members and is reported on their personal income tax returns. So dun sa farming income is yun na sinabi ko na it is classified by two, which is the raise and sell and the purchase and sell. So taxpayers can use either the accrual or cash basis for accounting for livestock and farm product inventories. The crop year basis can be used for long-term crops. Insurance proceeds from crop or livestock loss are taxable as they represent recovery of lost profits. So, recoveries of past deductions. If a taxpayer recovers past deductions from gross income or pays less than the initially deducted amount for an accrued expense, it must be determined if this resulted in a tax benefit. So, for examples include recovering bad debts, expense, receiving local or foreign tax refunds, recommissioning abandoned contracts, or interest expense being condoned. If a deduction created a tax benefit, the recovery must be added back to gross income in the year of recovery to recoup the lost tax. So the tax benefits from deductions, a taxpayer benefits from a deduction in two ways. So which is the directly by reducing taxable income in the deduction year. Number two is indirectly by reducing the tax liability in a subsequent year. So for example, a farmer sole proprietor claimed a $10,000 bad debts deduction in 2024, reducing their taxable income and tax liability in 2025. So they recovered $5,000. So the bad debt, this $5,000 recovery must be included in their 2025 gross income, because the initial deduction provided a tax benefit in 2024. The government will thus recover the tax previously saved due to the deduction. So next one is the indirectly, through reduction of future taxable income through carryover of not operating loss. Note, under our tax laws, the excess of deduction over gross income is taxable year. In a taxable year is carried over as a deduction against the net income of the next 3 years of operation. This is called net operating loss carryover of NOLCO. Because of this, almost all prior year deductions have tax benefit, hence the recovery is taxable. So, as you can see here in the illustration 1, which net income in the year deduction, a taxpayer incurred 60,000 pesos bad debts expense in 2019 or 2019, out which 35,000 pesos was recovered in 2021. So, an indirect tax benefit arises with the deduction results in a net operating loss, NOL or NOL, that's carried forward to reduce future taxable income. This carryover is called NOLCO under Philippines tax laws. Excess deduction over gross income in a year can be carried forward as a NOLCO to offset income in the following 3 years. The recovery of deduction that created this indirect benefit is taxable. So here in illustration 1, 60,000 bad debts deduction in 2019 with 35,000 recovery in 2021. The entire deduction was a tax benefit, so the recovery is added back to 2021 income. 2021 taxable income is 155,000 or 80,000 pesos. So plus 35,000 pesos.